Hey guys, what's up? Welcome back to another video. So in this video, I'm going to be talking about Netflix and the recent earnings announcement that came out that sent the share price tumbling 35% in one trading day, as we can see right here. A bit of a repeat performance from a few months ago when their share price also fell quite a bit from around like $687 to what was like $366. They're basically tumbling again, and so we're going to look into why this happened and if there's an opportunity to make a good return on our investment as a result of this. So as we can see from this article right here, they point out that the shares cratered more than 25% after the company reported a loss of subscribers for the first time in more than 10 years. And as you can see right here, they touch upon how basically it declined by more than 25%, or in this case, almost 40% in one trading day, which by dollar amount is down $124. So congrats to anybody who bought a put contract or opened some sort of bearish position on Netflix, because they definitely made a lot of money. This is the first reported loss that Netflix has experienced in subscribers since October 11th. And the main reasons that they cited for the loss in subscribers came from increased competition from competitors like YouTube, Amazon, and Hulu, as well as increased password sharing. They estimate that across 222 million paid households, that there are about 100 million households that are just sharing accounts with the 222 million households. So that's definitely impeding their growth moving forward. And on top of that, they cited inflation, which is obviously at like close to 8% or 9% now, the highest levels of inflation that have happened in America in the last 40 years. And then on top of that, there was something that happened in Russia and Ukraine, obviously, and that ongoing conflict had a pretty substantial impact on their subscriber count. And we'll see exactly why that is in a little bit here. But something else we can see right here, which is pretty interesting, is that other streaming service stocks like Disney, Roku, and Spotify also tumbled during trading hours, because investors are anticipating that since Netflix tumbled quite a bit as a result of them losing a couple of subscribers to their total subscriber count, they're anticipating that Disney, Roku, and Spotify might also experience some sort of subscriber count decrease, and so those stocks were hit pretty hard upon the news with Netflix as well. Also, typically with earnings, the actual announcement of whatever happened during that quarter isn't really what sends the share price moving substantially in either direction. It's the forecast that management often gives to shareholders, investors, and analysts that sends the share price moving pretty substantially, like it has right here. And in Netflix's first quarter for 2022, in their quarterly announcement, they basically said that they anticipated that in the second quarter of 2022 that their subscriber count was going to decrease by over 2 million. And so that was what really sent the share price of Netflix crashing down like this, was that in the first quarter of 2022, they experienced the first loss that they've had in the last decade of 200,000 subscribers. And now they're saying that in the second quarter, they might get hit even harder with a loss of about 2 million paid subscribers to their total subscriber count of around 220 million paid subscribers, give or take. And so obviously this is coming from a lot of different changes that have been happening in the macro economy of the global economy, one of which is the fact that Netflix experienced a lot of positive growth from the lockdown measures that were implemented worldwide. And so a lot of people who were at home, who were looking for entertainment, pretty much went straight to Netflix. And now, as a result of the lockdown measures being lifted, obviously people are returning to their normal lives, and so Netflix is experiencing a lot of slowdown in growth as a result of that. And we can see right here that Reed Hastings, the co-CEO, pointed out that Netflix is basically considering slightly altering their business model to include advertisements on their streaming platform, so that they can add cheaper subscription alternatives and different tier lists of subscriptions to their users to try to attract more users to use their platform. And then also, if we scroll down right here, we can see this is the reason why the conflict happening in Russia and Ukraine right now had such a substantial impact on Netflix's subscriber count, because the suspension of their streaming service in Russia resulted in a subscriber count loss of 700,000 subscribers. And so if this didn't happen, then Netflix would have seen an overall increase of 500,000 subscribers in the first quarter of 2022. And we can actually see right here from their letter to shareholders, a little chart here that shows their financials for each quarter over the last year from quarter 1 of 2021 to quarter 1 of 2022, as well as the forecast for quarter 2 of 2022. We can see right here that their global streaming paid memberships decreased in the fourth quarter of 2021 from 221,840,000 subscribers to 640,000 subscribers. And then obviously, like they said before, they're anticipating that that's going to drop even further to 219 million subscribers. So obviously Netflix is getting hit pretty hard right here, and it's not really looking that good for Netflix in the short run. And we can see that's obviously been priced into the stock recently. And then right here, they point out a couple of their key financial metrics, but I want to look into that a little bit more detail by going into their financial statements that they pointed out in their letter to their shareholders, which starts on page 9 right here. And we can see right here from their income statement, their earnings per share, they basically reported $3.53 per share, and analysts were expecting about $2.89 per share. So even though they substantially beat the earnings per share expectations that analysts had for Netflix, the fact that the forecast was so grim sent the share price moving in the opposite direction. And so anybody who might have expected Netflix earnings per share to increase during this time, and they might have bought call options as a result of that, thinking that they would have profited from that. It's very interesting to see that obviously that's not often the case, or maybe it is often the case, but that's not always the case. In this case in particular, even though they had a pretty substantial beat of the analysts' expected earnings, their share price still went in the negative direction. So also right here, we can see their revenue increased from the prior period by about 10% to $7.87 billion of revenue, and analysts expected about $7.93 billion of revenue, so Netflix didn't really beat analysts' expectations in that regard. Also, their net income fell from $1.6 billion by about 6.4% from the year prior at about $1.7 billion in the first quarter of 2021. And then also, if I scroll down here to their balance sheet, we can see that their overall assets have increased by about $1 billion from $44 billion to $45 billion. And we can also see that their retained earnings increased by about $2 billion over this period as well. And retained earnings is like Warren Buffett's most favorite line item. He always likes to see that they have a lot of retained earnings because that means that they can reinvest back into the business. And then lastly, for their cash flow statement, which is going to lead me into the discounted cash flow analysis that I always end my videos off with, we can see right here that their free cash flow for the first quarter of 2022 was $802 million, which is up from $692 million in the first quarter of 2021. And we can see that just by taking the net cash provided by operating activities and then just subtracting the purchases of property and equipment, otherwise known as capital expenditures. And we can see that that has increased year over year from the first quarter of 2021 to 2022. And so lastly, obviously, as I touched on before, they experienced a loss of 200,000 compared to what analysts expected as 2.73 million adds to their total subscriber count. So that was a pretty hard hit by Netflix. They basically said a couple months prior to this that they were anticipating that their subscriber count would increase by about 2.42 something million subscribers. And that didn't happen. They actually ended up losing subscribers. And lastly, we can see right here from this discounted cash flow analysis that this is according to some of the metrics from their recent annual reports for 2021 and 2020. For 2021, they actually had negative free cash flow, so I wasn't really able to use the free cash flow metrics for 2021. I used 2020's year one free cash flow because it was the only cash flow that was positive in recent years. And then also for the growth rates that I got from Yahoo Finance, I anticipate that Netflix for the next 5 years will grow at about 16.89% compounded annually. And then they have about 444 million shares outstanding. And if we do the math, we can see that the intrinsic value per share is estimated to be about $64 per share, with a 30% margin of safety of $45 per share and a 50% margin of safety of $32 per share. And so compared to their current share price, that means that even though Netflix has tumbled quite quite a bit. According to the analysts' projections for their future growth rates, as well as some of the cash flow metrics and some of the cash and debt that's currently sitting on their balance sheet, we can see that Netflix might potentially still be overvalued. They are currently priced at about 31 times earnings, so time will tell to see whether or not it presents somewhat of a buying opportunity. Over the last 5 years, they're only up 54% because of the recent declines in the share price. At one point, they were up about almost 400%. So according to this, it looks like Netflix could present a good buying opportunity, but according to what the analysts think, it might not present a good buying opportunity. Let me know in the comments section down below. I'd love to know what everyone watching this video thinks about Netflix to see if it's a good investment or a bad investment. And let me know if anybody made money on Netflix recently from some sort of bearish position like buying put contracts or something like that. I would definitely love to talk about it. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.